This is Camille Sams, and thank you for tuning into the Zen Lender Mortgage channel. This segment is a part of the series of the loan process, and this particular episode is discussing what happens if your appraisal, the value of the appraisal, is higher or lower than your purchase price. So let's start with what happens if it's higher, because then that's like great for you. So we celebrate, we say you've chosen a property that has extra equity, and the seller is not allowed to increase the purchase price based on the higher appraised value. While there are real estate laws in California preventing the seller from renegotiating the sales price based on a higher appraised value, most loan officers will not release the appraisal report to the seller nor the listing agent to avoid any reconsideration or change in terms. So, however, the seller having knowledge of this information could affect any pending repair credit negotiation. So, in other words, the seller cannot come back and say, oh, this property appraised for $5,000, $10,000 higher than what we have as our purchase price in contract. But they could say, well, I'm not going to, give you that extra $5,000 or $10,000 credit that we had initially negotiated. Or they're going to say that, we're not going to give you that repair credit that was discussed because you now have a property with additional equity. It's not like you can tap into the equity immediately after the close of escrow, but I'm sure that you can appreciate the psychological effect and why the seller would want to change the terms. So, what happens if the appraisal comes in lower than your purchase price? So that's where there becomes some negotiations going back and forth, and you and your agent will discuss the option of asking the seller to reduce the purchase price to match the appraised value. So often what takes place is the buyer and the seller decide to split the difference, as I call it, by agreeing to reduce the price down to half the difference of the amount between the purchase price and the appraised value. And you, the buyer, will pay the other half out of pocket. So it's important to note the lender will only approve the loan based on the appraised value. They will not prevent you from buying the home that did not meet the purchase price on the contract, but the cost difference will come at the expense of the buyer, literally. So there is a addendum, or there is a disclosure that comes out on the FHA and the VA loans that specifically say this, that you are agreeing to proceed with the price of this property, and that the lender will only lend based on the appraised value, and any difference in price that is lower is the buyer's responsibility. Well, it's the same on all loans. It's just that FHA and VA put it in writing. So to kind of explain what I mean about splitting the difference. So let's say the home appraised for $5,000 less than the purchase price on the contract. The buyer, not the lender, is responsible for paying the additional $5,000 as a part of the closing costs. So in other words, if the house came in at $5,000 less, then that means that you, the buyer, would be coming in with the additional $5,000. So you would have to add that in, okay? Alternatively, if the seller agrees to lower the purchase price by $2,500, then the additional amount for you to pay in your closing costs will only be $2,500, thus splitting the difference or meeting somewhere in the middle. So the seller agrees to take a $2,500 reduction in their purchase price, and then you agree to bring in an additional $2,500 into the close of escrow. So that's what I mean by splitting the difference. The appraisal contingency is another step when you notify the seller you're at a commitment to purchasing the property. So once the appraisal contingency is removed, you are formally notifying the seller you will not be canceling escrow as a result of the value of the home. So, that's the difference between what happens when it's higher or lower. Now, what does it mean when the appraisal is subject to? So if there are no repairs, it means that the property is being sold as is, the value is as is, nothing else needs to happen. So, subject to happens when the appraiser acknowledges the value of the home might match or exceed the purchase price once certain repairs have been completed. And they could be major or they could be minor. So, after the repairs are confirmed to have been fixed by the seller, a reinspection report will be issued by the appraiser changing the value to as is. And the appraisal being changed from subject to as is a lender requirement also. I in my 17 or so years of doing business, I've never seen a situation where a lender will close escrow or approve a loan on a subject to appraisal. It does have to get updated. So there's typically a cost for the reinspection report that can range from $100 to $150 and is paid by the buyer. The report must be updated by the appraiser based on their physical inspection of the property to confirm the repairs have been completed. So you're paying for the cost of their time and additional services. So some common examples of repairs here in California, because it's earthquake country, we are required to have the water heater double strapped. And we're also required to have CO2 detectors in the home, in the property. And there could be a number, there's a certain number that are required based on the size of the home, how many bedrooms, and where they have to be positioned. So often what happens is we get a subject to appraisal when the water heater is not double strapped or the CO2 detectors are not detected. Other examples could be where there is a gate or a wall or something. Usually you see this with brick walls in the backyard that is kind of collapsing. That could be a safety issue. That could be a reason why the appraiser says, okay, this property, yeah, it can get the value, but it's subject to fixing that back gate. Chimneys age over time and they tend to separate from the home. Those are other reasons why you could have a subject to. Something else could be where maybe the plumbing isn't working properly, or the electricity isn't on at the time of the inspection, or the gas isn't on at the time of the inspection, at the appraisal appointment. And so the appraiser is not able to check certain systems within the home to confirm that they actually are operational. So those are other common examples of why there's why there's a subject to. Just wanted to let you know that it isn't always where there's something like drastically wrong with the property and it's going to cost, thousands and thousands of dollars for the seller to fix it. Usually it's something minor like that. And so that is basically what happens if the appraisal is higher, lower, or subject to. I hope you found this helpful. Please let me know if you have any questions. And I'm always here to help. And I look forward to the opportunity to talking to you soon. Have a wonderful day.